If you're a commercial landlord, I want you to listen up, because the single biggest risk you face probably isn't what you think. It's not a fire, it's not a storm, it's this invisible financial gap between your insurance policy and your tenants. It's a place that can cost you everything. So today, we're going to pull back the curtain on this gap and show you exactly how to slam it shut for good.
Let's just dive right into a real-world scenario. Imagine this. A customer is in your tenant's shop, they slip on a wet floor, and they sue. Now, who are they going to name in that lawsuit? The tenant? For sure. But you can bet they're also coming after you, the property owner. And if you aren't set up the right way, that claim is going to hit your policy first, putting your personal assets right in the line of fire.
And that, right there, is the heart of the problem. We call it the liability gap. It's this dangerous gray area where your responsibility as the owner overlaps with what your tenant is doing. And believe me, if it's not managed perfectly, you're the one who ends up paying the price. So let's build your defense, starting with your most foundational shield. So how do we start building that defense? Well, it all begins with a very specific kind of insurance. You know, a lot of landlords think a standard property policy is going to cut it. It's not. What you really need is something called a Lessor's risk-only policy, or LRO for short.
An LRO policy is pretty simple when you break it down. It's designed for landlords, just like you, who rent out their building instead of running a business in it themselves. It gets that your risks are totally different from an owner-occupied business. It has some really crucial parts, but honestly, it's what it doesn't cover that creates this gap we're talking about.
Okay, take a look at this because this slide really lays it all out. On the left, you see what your LRO policy does protect. It covers the physical building, the walls, the roof, and your liability for common areas like the parking lot. But now look at the right side. It absolutely does not cover your tenant's business, their stuff inside the unit, or, and this is the big one, claims that happened because of their negligence. That's on them to cover. So how do you make sure they do?
And that leads us to the core strategy, the real secret sauce for protecting your investment. It's all about legally transferring that risk over to your tenant. This isn't just about your insurance policy anymore. This is about the power hidden inside your lease agreement and one single clause that changes everything.
So here's the bottom line. Your LRO policy, that's your safety net, but you never, ever want to use it for something your tenant caused. The goal, the entire game, is to set up your lease so that their insurance policy is legally forced to be the first line of defense, so yours never even gets a scratch.
This is it. Seriously, this is the single most important phrase you can have in your lease. When you require your tenant to name you, the landlord, as an additional insured on their liability policy, what you're really doing is legally wrapping yourself in their blanket of coverage. It is a brilliant and simple way to transfer that risk.
So let's break down why this is such a game changer for you. First, when you're an additional insured, their insurance company has to defend you in court. That's huge. Second, this protects your own claims history, which keeps your future insurance rates down. And maybe the best part, since their policy is footing the bill, you probably won't have to pay your own deductible. It's just an incredible financial shield.
But hang on, we're not quite done. Being named as an additional insured is absolutely critical, but it's not the final step. To be truly buttoned up, you need to close a few potential backdoors in your own LRO policy. And we do that with a couple of specific add-ons called endorsements. Let's play out another scenario. Imagine a fire damages your building. Your tenant has to move out for 6 months while you're doing repairs. Well, their rent checks just stopped coming in. But guess what didn't stop? Your mortgage payment, your property taxes, your own bills. How in the world do you cover that gap?
This is where these two endorsements become your best friends. First, loss of rents coverage. It does exactly what it sounds like. It pays you the rent you're losing while the building is being fixed, keeping your cash flow steady. Second, ordinance or law coverage. This one is so important for older buildings. If new building codes say you have to add expensive new sprinklers during the rebuild, this coverage pays for that extra cost, an expense that could otherwise sink you.
Okay, so we've covered the risks and we've walked through the layers of protection. Now let's talk about actually getting it done. Because protecting your asset isn't just about having a policy, it's about having the right framework where your policy and your lease work together perfectly. So, I want you to ask yourself a really simple question right now. Can you, right now, put your hands on a current certificate of insurance for every single tenant that clearly shows you are listed as an additional insured? If you hesitated, or if the answer is no, then you are exposed, plain and simple. But the good news is we can fix that in the next 60 seconds. Look, securing your assets is so much easier than you think. All you have to do is click the link in the description below. It'll start a totally free, no-strings-attached review of your policy. Our team lives and breathes this stuff, and we can make sure you're set up for maximum risk transfer. It's honestly the fastest way to get true peace of mind.
Hey, thank you so much for spending this time with us today. Our whole goal here is to give real estate investors like you the knowledge you need to protect what you've worked so hard to build. If you found this helpful, do us a huge favor and hit that subscribe button. We've got a lot more insights just like this coming your way.
I want to leave you with this one thought from JFK. Don't wait for the lawsuit. Don't wait for the fire to find out you've got a gap in your coverage. The time to make sure your financial roof is solid is right now, today, while the sun is shining. Take action. Go protect what you've built.